Cryptilians and crypto crackheads, today is Tuesday, August 17th, 2021, and turn it up to ×2 playback speed on YouTube. It makes the initiation of timification much more enjoyable. Let's get after it. This is going to be an overall market Bitcoin Ethereum video. I'm going to start off by looking at total 2 on TradingView, which is the overall market cap of all of crypto minus Bitcoin. Later, we're going to look at how both Cardano and Ethereum are positioned way differently than Bitcoin. And then we will look at what happened the last time those two assets were positioned way differently than Bitcoin. And then we will go from there. So the overall goal of this is to show you reasons to be cautious at this time, potentially being prepared for, even on the Bitcoin graph, a higher low before marching up to all-time highs, which is what everybody and their sister are waiting for, or to see some type of more dramatic move down, not new lows necessarily, but some more dramatic move down, slightly more dramatic, for potentially also a higher low. But the idea that this aggressive move up could be coming to an end if it is not already, and what to expect. So this is not saying I think this is 90% probable or anything that things are going to come down from here right away. However, I want to give you reasons to consider strongly being cautious right now, especially if you have been in long positions, you have not taken profits, or you're planning on taking long positions. I want to give you words of caution throughout this video. So here we go. So this is the total 2. Like I said earlier, all altcoins market cap. So as you can see in the weekly chart, so I'm on the weekly chart, looking down at the RSI down here and down here, looking at the so I'm relating this hump to this hump. Words of caution, right? Not saying I think all this downside will happen, but rather some type of downside. It might be shaping up, so that's what we're gonna keep our eyes on right now. So these 4 points, 1, 2, 3, 4, and then these 2, so for 5 and 6. And this is the weekly chart. That's what I'm going to be looking at. So what's the meaning of this? Well, when there was a very large rally that got hot fast and it could not hold its head above, what was shown on the RSI was that the weekly RSI came down to hit roughly the white line area at the bottom before breaking into the bearish zone, which is this red area or anything below here. Bounced roughly off the white line, had one more run up, had the RSI just peek its head over the moving average, which is this white line, the moving average right here. And the RSI is the green stuff itself. So in that run, if I can go back to price, you can see that if I take this spot, circle it, and go straight up, it has to do with that rally and the strength of it. So large fall down on RSI, pings off white line, comes right above the moving average and fails. Same thing now. Close to the same thing. Fall down, pinged roughly off of the white line, came just above the moving average, and potential failure in specific regards to making a lower high before making a higher low. Now let's go to the weekly Stokes, and I will mark off where this is. I'll bring it down about right there. So I'll do it actually on the red week. So the first red week, I will mark that here. And obviously, well, current price. So if I take where current weekly Stokes are now, so the weekly Stokes are also at the exact same level, almost the exact same level as they were. Actually, they're right at the same. During this dead cat bounce of interest. Again, I'm not saying there's going to be a dead cat bounce. And I'm not saying that price is going to continue making lower lows, but rather some type of down move is very possible at this point. It's only a question of will it make a higher low or not, A, and then B, at what level will that higher low be? In my previous Bitcoin videos, which you can, if you are new to this channel and you haven't seen my Bitcoin videos, for example, from yesterday and one from last week, I explain in a little bit more detail what you could watch out for in regard to potential dead cat bounce. So this is the total 2 chart. So now let's go to Bitcoin and hopefully I grab a clean chart. Good. So let's go to Bitcoin and let's take roughly the same dead cat bounce. Actually, let's just look at the current one. So very similar posturing, where the weekly RSI hits roughly the white line, peeks its head out over the moving average, which is the white line. And let's see in the past when the weekly, so there won't be many data points for this because on a weekly level, Bitcoin's a very young asset. So we're not going to have many sample sizes about what I'm trying to hunt down. It won't take very long to hunt it. But I want to see out of the times that Bitcoin weekly RSI has hit this level, roughly, you know, the white line or below, on its first push up to either hit or get above the moving average, this white line, how many times did it continue going? And how many times did it fail? So we need to look for a downturn first. Okay, so pretty good high RSI. This was the this was price action after 2019 January when Bitcoin hit 3,200. That's what you're looking at on your screen by the RSI. This is Bitcoin screaming to 14K on a wick. 13.9 or something like that. But its weekly closure, I think, was down at 11. So you had a big move up, and then you had a move down. Just like, you know, similar to today's price action going to 64K, right? And then moving down. So hit the white line, bounced up, and failed. And let's see at what level. That's at 55.36. So let's see what level this has gotten. 57. So in the same ballpark. Slightly different posturing. This did not go slightly above, and this did. All right. And even on the second try, which was coronavirus stuff in a very large bull trap, weekly RSI got up to 58.5, and right now it's at 57, and both were positioned above the RSI. And this was the second attempt, right? And it still failed, and this is the first. So let's go look at other first attempts. Hit roughly the white line, tried to come up to the moving average, failed, did it again, actually hit the white line, came up to the moving average, failed. So let's go look at what late April 2018 looked like. Probably a dead cat bounce was this, when I kept getting, you know, the bottom here was like 7,200, then like 6,200, 62, it just kept writing. These are the dead cat bounces shown in the RSI, but which one should I use? I'll actually use this one. So this bounce came up to 57.5 or so, and this is 57.5 about. So it's a little lower right now. So let's go look at what late February 2018 did. Let's look at to where the Stokes got. Stokes got up to 53. Draw a line just, you know, so we can get some type of comparison. All right, there. And that's where current weekly Stokes are right now. So you're seeing some similarities here of what, you know, bull trappy type of action looks like outside of price on very basic yet, which are my primary indicators. So I like to keep things pretty simple. And there are a lot of striking similarities, folks. A lot of striking similarities. However, what is different right now is that Cardano and Ethereum's price on a weekly and monthly scale are positioned very differently than Bitcoin's. I don't know what to make of it. So let's look at Bitcoin on the monthly first so you can see what I'm saying here. Just a quick review. So focus on Bitcoin's candles up here at the top, right? Current price of Bitcoin under roughly those candles, I just picked somewhere in the middle there, from here to there, is 21% below. Go to Ethereum. Go to Ethereum. Those same monthly candles at the top, current price is over it. This is very similar to the idea that on a monthly scale, this red line, this is Ethereum on the monthly, this red line, which is the monthly 10 EMA, was never broken in specific terms of a monthly closure. Bitcoin, on the other hand, did close below. That's part of the disparity. However, I think that these two assets and Cardano really need to get on roughly the same page, but a little bit closer to the same page than they are right now. I think something has to sort itself out. Similar to what I said in my yesterday's Bitcoin video, either Bitcoin's got to keep racing up while Ethereum and Cardano stall and just, maybe not go down, but go sideways and consolidate. And then Bitcoin gets a quick consolidation and then everything hurries up together, or everything slowly comes down for a month or something. So I think something has to happen where these assets are positioned more similarly on a monthly candle closure scale. This gap is big. This is a big difference. So let's go to Cardano. Same idea here. Up monthly candle closures, price is significantly over it. So is 20% over. So the disparity between Cardano and Bitcoin is pretty monster. Let's go 20% above here. That would put you at 71K. So Cardano is sitting at a Bitcoin equivalent of 71K. And the difference from that price to current price is 35%. So there's a 35% equivalent disparity between Cardano and Bitcoin. Now, actually the first question that you might have in your mind is, do they have to sort themselves out? No. However, I simply think they will. I think it's more probable that on a monthly candle closure, either soon all will be closing under this line in the sand made by the monthly top end candle closures. So for example, Bitcoin might, just hang out and mosey its way up as Ethereum and Cardano mosey their way down, and then they meet somewhere in the middle, similar to how I had guessed, and it ended up being a really good guess, that Ethereum and Bitcoin would both hit roughly their daily 200 at the same time because they were on different sides too far apart, similar scenario, and they both hit that daily 200 on the same day. Not the exact same posturing, because Ethereum was closing slightly above that line, which I guess I can show you here in a second. So right around here and here are the points where or it might have actually been the second one. So let's look at July 14th. Yeah, just the middle portion of July. I think Bitcoin was coming up to its, or getting closer to its 200 EMA, even though it was living way below, as Ethereum was living way above. So then they came to meet roughly in the middle before a move up. All right, so let's take a look. Middle of what? July. So Bitcoin had been staying under its 200, even though it went fairly sideways. It was stalling and waiting for Ethereum to come from way above to below, and they both positioned themselves in a little slot, like a notch, like a bow and arrow, right? You have a notch in that arrow to hit the line. It almost looks like they both slotted at the same rough area, and it's almost like shooting two arrows at once. And they both slotted each other right about here in this pocket in the middle of July. So go back. So even though Bitcoin price action didn't do much, Ethereum's did, while Bitcoin's did not, and they positioned themselves similarly versus the daily 200. Not versus the monthly and not versus the weekly, but they first sorted themselves out on the daily, and I think the next thing to happen is to sort themselves out on the weekly and monthly, which would happen simultaneously. I think the sorting of things out will happen on a daily, then weekly, then monthly basis. And I think it's going to happen. And I don't know which way it'll happen. Again, it could happen by Bitcoin screaming up. Wow, so this is Bitcoin. So how Bitcoin chilled out and went sideways-ish down low, Ethereum and Cardano could do this, but up high, while the inverse of what Ethereum did. Ethereum was way up here, and then it came down. The inverse of this could happen for Bitcoin. Bitcoin could essentially start coming up, just like Ethereum had gone down to get positioned similarly in this little pocket below the daily 200. And so I think the exact inverse could happen in a very bullish sense, while Ethereum just consolidates and Bitcoin potentially moves up, later, maybe not today or tomorrow, but in a month or two, moseys its way up to the mid 50s, if not low 60s, to be positioned similarly, closer to the monthly candle closures at the top, which is coming in at let's just put it in the middle somewhere, something like that, at 58K. All right, so that is one of the things that I'm seeing now. Given that the beginning of this video had to do with reasons to be cautious, or reasons to at least keep as a top 3 most probable, we are at the top of a bull trap and it's beginning to move down. Just how far down it'll go, we're going to have to take that day by day. But taking that spirit, right, that idea, and applying it to the idea that Ethereum and Cardano and Bitcoin need to sort themselves out, I almost feel that Cardano and Ethereum are going to take a bigger hit than Bitcoin. Bitcoin comes down, finds a slot somewhere down here, while Ethereum and Cardano come back below this top line in the sand on the monthly scale, as Bitcoin doesn't quite race up there necessarily, but hangs out, as the other two came down just like happened last time. And the reason I think that is because the last time Bitcoin and Cardano and Ethereum were positioned differently, that transpired into a massive downturn from Bitcoin 58K to Bitcoin 29K. So let me show you. Ethereum, on the 4-hour scale, I'm on a 4-hour chart here. So this is when they started being positioned differently, about right here on the 25th of April. Ethereum not only made new all-time highs, but screamed past all-time highs. Look, almost doubled its all-time high. So what was Bitcoin doing during the 25th of April, which would position itself totally differently? Well, very simple. It made a lower high. So this is when Ethereum was doing 100% run, 100% run from roughly this positioning. That's like equivalent of Bitcoin going to 100K. Literally, that's what it is. And it made a lower high at 58K. So both were positioned very, very differently. Bitcoin pulled the whole market down. Ethereum came with it. Bitcoin went sideways, and Ethereum went like this to come down into the same slot as Bitcoin was about right here. So I think something similar is about to happen, but Bitcoin potentially positioning itself somewhere sideways here as Cardano and Ethereum come back down below the equivalent of this level. So let's take a look at Cardano now. Let's look at it on a monthly scale. That would be something to the effect of, if that guess is correct, I'm thinking Cardano would need to come, I don't know, 8 to 10% below that line, which is at $1.76. So 10% below there would be $1.55. That'd be a pretty big drop. Maybe that's not going to happen. Let's see. Yeah, that's not that bad. It's a 30% correction. And if Bitcoin equivalent stays above this candle, but just goes sideways here, then they'll be both positioned very similarly in that scenario. And that would mean Bitcoin dominance is getting ready to take a leg up, a significant leg up. I wouldn't say, past 52% or anything, but I think you're going to start seeing some green daily candles here shortly, especially if this is what ends up happening. And again, this is just one potential scenario among many. I'm not trying to communicate this is what's going to happen, but this is something to keep in mind. And more importantly, it's something finicky. It's a little fishy, kind of like last time things got fishy. This was screaming up as Bitcoin wasn't, just like they're doing now. It was a huge trap. So we have things stacking up, reasons to be cautious, with the first part of this video showing you a lot of the posturings, whether it's price action and or indicators, simple indicators, they're positioned very similarly to the previous bull traps. And then we have this idea that the structure of the monthly and weekly candles are so different that they need to converge before the market can move up together, in my opinion. So I think, so that is an assumption that I just made, and that might be an incorrect assumption, but I'm going with that assumption for this video as a reason to be cautious. They need to sort themselves out. So mixing those two together, I think that Bitcoin is going to make overall gains on the market, go a little sideways and down, maybe not really that far down, maybe only to 40K, as Ethereum and Cardano make a bigger leg down in it. I think that's a strongly possible scenario. Definitely should be something within your top 3 to consider. So if you are in long positions right now and have not taken profits, it's something to consider. If you're planning on longing this market right now, just keep this in mind. It's something, to consider very strongly here. So let's take another look at Bitcoin price. And again, similar to how I said in my video from yesterday, this 12-hour chart is working pretty well. So whenever you've had candle closures or a second candle closure, typically you, under the red line, which is the 10, you typically get extended downside move. Maybe not for too crazy long, like it wasn't, there's only about 2 to 3 days here. However, you get some downside moves. Here, there was only one candle closing below, and then it get right back above. But now we have one candle close, 2 candle closes below, which would insinuate on this 12-hour chart some further downside. So what level on a 12-hour chart did Bitcoin price hit? Bitcoin came down a little bit below its 12-hour 200 EMA. So if it were to do something similar, perhaps draw a trend line of some sort, that would mean that from a pattern trader standpoint, a move could accelerate a little to the downside once Bitcoin price falls out of this channel, which is what pattern traders are looking at right now. About right, like, I would say about like that. And on its way down, which would cause, if this line, this moving average, were to do something similar and hold up Bitcoin, you could get a quick move down and a dip below this line, sort of like it dipped below here, because you're going to have a lot of pattern traders shorting that and selling Bitcoin. And that move might get pretty fast down to here, like within a single day once it breaks this point. So let's look at this on the daily scale. And then on top of pattern traders, you're going to have EMA traders seeing a daily close, potentially, if it keeps going down, below the daily 10 EMA, which a lot of people trade that to the downside, which would happen just before pattern traders see Bitcoin break this structure. So you have EMA traders see a close here, sell first, which would then, perhaps hours later, trigger sells from pattern traders, which would create a quick move down. And that could be, you know, like 39, 40K, but it might wick below down to 38.5 before a bounce, maybe getting just above this height here, coming back up to 45K, and then potentially moving down or recovering from here. I'm not for sure if it's going to recover. I don't want to make that guess right now if it were to hit this line. I'm simply focusing personally on the idea that I think Bitcoin, in this order of events, I think EMA traders will trade this down first, which would trigger your pattern traders. You could get a quick move down, and then how Bitcoin price reaction to this, once it gets there, if it gets there, I will reassess at that time. Now, one thing special about this EMA right now, outside of the 10 is just getting things right. On the 12-hour, nope, this is daily, sorry. On the 12-hour things, you're getting things pretty right. So I'm going to keep going with that until it doesn't work. However, the cool thing about this is that this EMA is lining up with very key horizontals created from these peaks right here. So you have a box of interest where Bitcoin could easily use all this resistance as future support, because previous resistance equals future support. So let's say from and you have support here too. So look. So your first line of support about right here from this high down to all these wicks and that wick. That's my top end area for a potential bounce. I think that Bitcoin will bounce there or lower. Go there or lower. That is my highest price target for some type of correction that looks like it's happening now. So my top end, most, wishful thinking is at about 42.2 for a bounce and recovery before Bitcoin, goes into 50K land. So that would be my top end. My next would be a box that encompasses a lot of this area of interest. So from this wick down to that candle body, I would put in this zone, and look where that 12-hour EMA is coming in at, right there. So what I could see happening is, given that you have another mountain peak or two mountain peaks just below this box, I could see a couple days or one day coming down below this box, a wick below, kind of like Bitcoin price went below the orange line here. I think something similar could happen, comes down here to tag this and this, just to say, hey, yes, that is support. Okay, let's go back up to here and potentially use this area as support. We're not going below this now. Let's make sure we can get this area back. I see something to that effect happening. And that would help a lot of stop hunts for people trying to long a higher low right here, which 40K is a pretty big target. So I would expect exchanges, or even folks with smart robots and algos, to try to trick the algos of other people's bots who are trying to long there, to get them out of that trade by coming down to hit this area before a move back up. And so if that were to happen in a stop hunt type of fashion, which happens all the time, it's not just exchanges doing crap, it's folks with, computer algos and a lot of money, hedge funds trying to trick other people's bots, less sophisticated stuff, right? So I would put a box between this area. This would be my stop hunt area. And I think this would be a pretty good snag, not in specific regard to this is where it's bouncing before it goes to 50K, but you'll likely get, if price does come here quickly without a big bounce, off one of these two levels, if you don't get a big bounce and maybe you only get small bounces, hesitation, then comes down, I think you're going to get a good reaction off of this, and it could be a tradable bounce. Even if Bitcoin ends up heading slightly lower after there, I think you're going to get a bounce off the zone, and a pretty quick one. Similar to how it was a pretty quick bounce here. I mean, this only lasted a day and a half or so. Or, nah, that looks like 2.5 days. So, let's see here. Yeah, 2.5 days. But I think the bounce could be a lot quicker, because it would be more of a stop hunt. And this is just a nice, sexy lower high. I mean, that's a good one. I don't think that this area will give you that, afford you the same leisure of trading down here and confirming, oh, it's holding. I think it would be a stop hunt, back up, try to get to this area, see if you can hold it. So this box here is between the price points of 39.2 and 38,000. So these are my three price targets for Bitcoin: 42.2, roughly 40,600. And roughly 38.6 in the middle of those boxes. Okay, so I'm going to leave those boxes here, but this is what I'm seeing here. And after EMA traders trade the daily closure below the 10, which would stimulate pattern traders shorting out of this channel, then you'll have more horizontal traders, which most people trade horizontals, even pattern traders should. Then you're going to have potentially even further and quicker downside move once this horizontal right here is broken, which would then cause you that wick before coming back up. So you have an order of three different things that could create some sell pressure, and which you would see the fear and greed index, do something like this, go to fear really quickly. I also expect that to happen while Bitcoin dominance goes up during this time. And while Bitcoin does this, and let's measure on a percentage basis, let's see what type of percentages that Cardano and Ethereum would have to do anything similar. So I'm saying Bitcoin may be down on a wick, 16% correction from current price, which really isn't that much. That's not a big move. I mean, it's very, very tradable, 20% from the top. Very normal size correction after going almost straight up. So let's go to Ethereum. I'm on the Ethereum 8-hour chart. So if Bitcoin does a 20% correction, and I think that Ethereum needs to correct slightly more, which would put it 23 to 27, it would land somewhere in this box, somewhere around 24.70 would be the middle of it. That would be my target. So the daily 200 EMA I think it's actually too low to be in play. Hold on. Nope, it's way down here, so I don't think that's going to, see. Let's do the weekly 10. So on a weekly scale, what that would mean for Ethereum is a test of the weekly 21. So this dashed line, this dashed line is the weekly 10. Weekly EMAs typically offer huge levels of support. What that would entail would be Ethereum coming down to the weekly 21, which will be creeping up, which will be exactly in the middle of this box. Ethereum would close, so the weekly 10 would be like this, the 21 would be like this. Ethereum price would hit here, close between, and then work its way back up to get above the 10. Would be roughly what I would be seeing. It might look something to this effect. So if you can imagine me extending these lines, something to that effect. So even potentially by, around the end of August, it could price could be back above its 10 EMA, but having come down here would set things right to get posturing on a very similar level to Bitcoin. So let's look at this on the monthly, where that would put things to go full circle. It would wick down, but close above this candle closure right here. It would wick below, but close above. So let's see what a 16% correction for Bitcoin would mean. I bet it would have something to do with that candle going below, then closing above. So let's go to Bitcoin. Let's just do 20% from the top. So 20% would put you below this candle just by a smidge, and then you'd get a bounce up, and the month would close above. So a lot of things can happen within a month, right? You have several weekly candles, all that, but from a monthly positioning basis, if things were to correct in this way, then Cardano, Ethereum, and Bitcoin would all be on the same page, and I think at that point, the bull run could continue with even more fierceness than with which it's recently risen. So that is kind of my main idea over the next month and a half or two. Does this idea have to pan out? Absolutely not. But I think I've come full circle on all of the reasons why you might be a little bit cautious if you're super bullish right now. However, I want to be very clear. If you are trading to the upside, like on a daily basis, for example, that's not bad. Continue doing it until it works, because the trend, the daily trend, is up right now. And it's still above, it's still above the daily 10, which is a very tradable event, right? So what easily could happen is, you try to catch a wick below the daily 10 and you expect it to keep marching up because the trend is up. That I am not trying to get anybody to stop trading the trend because the trend is your friend. Rather, and I'm not saying go short the market because it's going down. I'm not saying that. I'm only saying mostly for people who are bullish, if you're planning on to keep longing things or buying alts and this and that there are reasons to be careful. And if you're trading the trend up right now, I would say continue doing that, not financial advice. I would if I were in that position. And trade it until it doesn't work anymore. And just be ready to get out of your trade quickly, knowing that in the back of your mind, what I've stated in this video could happen. So I'm definitely not trying to suggest anybody to stop trading in uptrend, because it still is an uptrend, all right? So trade it until so if it's working, keep doing it until it doesn't work. But keep this stuff in the back of your mind. So if you like this content and you're new, hit subscribe. And if you do subscribe, leave me a comment. Whether you want to be a cryptillion or a crypto crackhead, now that you've joined the community, feel free to check out Patreon. The link is in the top. And if you are not new, just try to hit me a thumbs up and say you suck or whatever. Leave me some comment, and we'll see you next time. Thanks for helping out the algo.